In a larger SME or enterprise that you might have, you have a significant turnover. You have large volume of whether it's transactions processed and all the time money coming in, moving out. They have access to instant financing, so to speak. Whereas the people that we work with, the smaller merchants, they really tend to have normal people problems. And by that I mean, the problem isn't that they want to get money so that they can pay for a holiday, they can go spend and splurge a little bit on a nice night out or a dinner. They need their money so they can feed their family. They need their money so they can pursue and actually complete the jobs that have been ordered from their customers, or even purchase the products that they need, where the need for liquidity is so high that they need that payment beforehand before they can even go and purchase that product for the customer. So if they don't have access to the finances that they in their full right should have because they are doing a legitimate job for legitimate people, then all of a sudden you are delaying something which is crucial for them. They might not be able to feed their family or themselves. They might be putting their company's reputation at risk, or even worse, if you're for a big franchise, you might be looking at putting a national company at risk because the franchisees may be small even though the brand is big. So it's perverse to see that you have the range of settlement times and lack of inclusion when it comes to access to finance and settlement for these small businesses it's almost impossible to come by, and that's why I'm so happy with fintechs working on these day in, day out. But from just legacy, as I believe I mentioned before, where you have high street banks now with a T+54 day contract, where these small merchants don't have access to that money for almost 2 months. It's absolutely outrageous. It's ludicrous. High street banks don't have a choice at this point. It's interesting to see how long it's taken for some of them to accept that this is what's happening with the future. But that's also, historically what they tend to do. It's sort of, now this is going to roll out. It's not really going to be a thing, but then they need to turn around at some point. Some of them are doing very well. And the ones that are doing well, what they've done is create a working environment for small companies, whether it's fintechs or the startups, that can be of value to their customers, their merchants, their SMEs. In very simple terms, it's this working environment being put in between the legacy, the high street bank, and the startup. You push in the startup one end, and out on the other end comes something that has been formatted and grinded through to be able to work with the big legacy systems that you have, because their software is obviously immense, the level of data they have is immense, so it's important to shape it in some way, shape or form. And on the other end of that, you even have companies that have built this sort of all-encompassing working environment for the banks, where they generate revenue from literally being that layer that sits in between the bank or larger other institutions. I'm not going to exclusively talk on banks here, or other large institutions. It could be telecom companies. They're doing a lot of the same things, where they have, there's a big one in the UK, they have about 500,000 SMEs, and they are doing the same thing, doing it very well with creating this kind of working environment so that they can actually utilize this brilliant innovation, these amazing companies that are coming up now in the fintech space, specifically with regards to the financial inclusion section. They need to focus on including the people that need it the most. It sounds very simple. It sounds like complete common sense, but it's not being done. There are some companies that are doing some great work on this, and I think that's fantastic. And the priorities should absolutely be in however way that needs to be structured. It should be on giving merchants at least the option to have access to instant financing, whether that is instant settlement for payments, whether that's access to small cash loans. A good example on that is when PayPal bought iSettle, the first thing they rolled out, that was access to these small cash loans between £8,000 and £10,000. Which very often it doesn't go to anyone's pocket, sorry. It goes to paying for that upfront product that you need to buy. Someone has paid you that you don't have the money yet, you should be able to pay it back within a few days. But again, it just comes to utilizing the ability to service customers. And if you have to pay, whether it's 0.5% to 1% on top of the transaction fees that you already have, every single merchant that I know would be happy about that. If it meant that they could be reassured that they would have their money and they'd have it now, they'd have access to it. Or if you have to pay a certain percentage of every transaction that you make to pay back a small cash loan that you took out because a £3,000 invoice wasn't paid on time. Again, 100% of the merchants that I know and have worked with over the past 3 years through SmartTrade App, they would absolutely be thrilled, overjoyed to have access to it. And then of course, if you don't want to pay for it, then you probably don't need it. And in which case, just don't use it. It's all about access. It's about having the availability and the flexibility to offer it. I can assure you every financial institution on earth that have done any probability calculations could put together a risk structure that would allow these companies to actually have access to that finance. And on top of that, I can assure you that all insurance companies in the world would be happy to insure those liabilities so that the risk wouldn't necessarily even lie with the ones offering that financial inclusion. So all in all, there's a long line of companies that would benefit massively from being able to just giving that level of flexibility.